What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is December 9th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to try to answer a very imperative and controversial question within the cryptocurrency space, and that is whether or not the halving event for Bitcoin, which is this very big event coming up in May of 2020, has been priced into Bitcoin's price. And this is, I think, a very fair question. And no matter where you stand, I just want to provide my perspective today using things like data science and general market principles to try to provide some perspective as to how I view this, right? Again, it's not financial advice, it's just my view. And I'm going to be short, sweet, and to the point in this, guys. I'm going to try to explain it as simple as possible. Before we dive into that, I just want to let you all know that this video is sponsored by eToro. Now, for those of you who may not know, eToro is a social trading platform that allows you to not only interact with other traders, but they just recently launched their crypto copy trading function where you can actually trade alongside a lot of different traders, including myself. So you can see what I'm currently holding, you can see the stats, my profile, and on just about any other profile, you can see a copy button up here where you'll be able to copy traders real time at the same price and at the same exact time frame as well. So if you're interested, check out the link down below in the description to learn more about eToro. But let's go ahead and dive into this question here, guys. I think it's a very important one. Now, let's start off from ground zero, okay? For those of you who may not know about what the Bitcoin halving event is, I'll give you a very brief description. It's a very imperative and important thing about Bitcoin that makes it so scarce, and that is the fact that after a certain period of time, the new issuance of Bitcoin is reduced in half. So for those of you who know more on the technical side, Bitcoin transactions are put into what's known as blocks. And once they are placed in a block, they're verified. And this is done through miners, okay? Now, to cut out a lot of the confusion, these miners have an economic incentive to provide a lot of computational power that provides some sense of security to transactions and makes it so that, not anyone can just verify any transaction. There's a lot of economic input through computational power and electricity to do this. So there has to be some economic reward to do it. And this is exactly what basically the Bitcoin block reward is in this case. If you discover a block, in this case, if you put in a large amount of computational resources and you discover a specific hash or basically a secret code in some sense to be able to say that you found and discovered the new block, then in this case, you're going to receive 12.5 Bitcoin, which is a pretty good reward, right? But every 4 years, about every 4 years in this case specifically, after about 210,000 blocks have been mined, as one is usually generated about every 10 minutes, it can vary, that gets dropped down to half of the previous value. So in this case, we're going from 12.5 to 6.25. Now, this is going to be very imperative to ask whether or not this is going to have an effect on price in the long term. Now, I'm already going to go ahead and give you guys some hints here, right? There's a great website, which we've used on the channel for those of you who are frequent viewers. Look into bitcoin.com. It's free. You guys should go use it. It's awesome. It's a great site. A lot of great data science models. We've already talked about how market price right now is actually in an okay spot comparative to history. This is exactly where Bitcoin has been in the same time frame here up to what's known as the halving event, right? So again, we can take a look here at the 2-year MA multiplier, which is looking good. The stock to flow model, which we're going to really come back to. The MVRVZ score, which basically takes market cap versus realized cap. Topic for another time. Again, completely fine where we're at right now. And also, as well, just to kind of cut out a lot of the fear that's in the market, if you bought Bitcoin anywhere between 88.6% of its history, of course, definitely favoring towards the earlier years, you're still up on your money in the case of Bitcoin, right? So we have all these data science models, but the one that's most relevant is the stock to flow model. And this really bases itself around the concept of Bitcoin stock to flow and halving event. So let's go ahead and talk about the stock to flow, okay? The stock to flow is a general measurement, and you guys can go ahead and look at the formulations. I'm not going to dive too deep into it, but it's basically showcasing how up leading towards the halving events, we tend to see an increase in Bitcoin's price, right? The stock to flow ratio practically doubles each and every time after these 4 years because the halving in this case is being implemented at price. This means that there's less Bitcoin coming into circulation. And we can see here that during these blue periods, this is when we prepare for a lot of major movements. So a lot of people have been betting on this halving event leading to Bitcoin's next big price move. And the stock to flow model says that we should be going somewhere around $100,000, which has been my general target range for some time in 2021, 2022, so a few years out, right? I'm not calling for it tomorrow or for it to moon. I hate those kind of terms. Like, this is a very reasonable expectation, and I'll talk a little bit about why that is. Some people would say, again, Nick, how can you be so confident about that when this is public knowledge? If everyone's anticipating it's good 100,000, why aren't people buying it? And it's a very fair question, which I don't think many people have done a good job of answering. So I'm going to do that now. There's two reasons for this. The first one is that not everyone is in the crypto sphere. Okay, I think there's something that's very imperative for us to understand, guys, and that is that we can tend to be in a bubble sometimes when it comes to the crypto space. We think because of how great Bitcoin is and how much we talk about it and how much we spend time on it, and maybe you may even be invested in Bitcoin yourself or considering investing because you like it so much. Well, we're a small minority of people across the world. We are a very small group, a global community that shares the same passion. In fact, you'll get a variety of statistics right now, but I would say that the amount of people who actually hold Bitcoin on the world stage is somewhere around 0.3 or 0.5%. The people who have even used Bitcoin to some degree are at less than 1%. And that's including not just Bitcoin, but cryptocurrencies in general. So when we talk about Bitcoin specifically, it's a very small number of people who even understand Bitcoin, let alone understand these data science models. I mean, let's be real, guys. Most people don't like looking at this stuff. If you're here, you're a geek like me, you love these things. You like understanding things on a deeper level, and that's completely okay because we're all proud geeks here at the Data Dash channel, right? It's not a derogatory term. If you're into this stuff, you're on the cutting edge. You're definitely studying these markets in a much deeper way than most people are. That also makes it very clear that you're a very small individual out of a large plethora of people who don't even know about cryptocurrencies. And if you were to mention crypto, blockchain, or Bitcoin, they're going to get overwhelmed. So if we understand that people, the vast majority of people don't know about this, right? And we're in our small bubble here. What really causes this kind of movement? I think that's a very genuine kind of response. They're like, okay, Nick, you make a fair point. Not everyone knows about this, but how can you be so confident that the halving is going to come through? Well, I'd say there's a reason that it has happened both in the past, these two major times where we led into one of Bitcoin's halving events here in 2016 and back here as well, back here in 2012. So why is it the third time around that it's going to be the same? Let's go ahead and talk about it. Well, you've also probably heard me mention of a term here on the channel many times if you're an avid viewer. And if you aren't, you should definitely subscribe and drop a like. I always appreciate it. Of inflows and outflows. Okay, it's a very simple principle. Markets tend to go up. The price of an asset like Bitcoin tends to go up when there are more inflows than outflows. Inflows is new money in, dollars buying Bitcoin, and outflows are holders of Bitcoin selling their Bitcoin for dollars. Okay. Now, I want to make something very clear here. A lot of people will say, Nick, there's always a buyer and seller on each side of the trade. If I'm making a buy order on the market, there's someone who's selling their Bitcoin. If I'm selling my Bitcoin on the market, someone's buying it. How is there a difference in inflows and outflows? And that's a very good question. The difference in this case is the market buy or sell side pressure, okay? So there are different types of orders in the market. There are those who set limit orders, who say in the case of a buyer, I'm not going to buy Bitcoin. It's sitting at 7,500 now. I'm not going to buy it until it goes to 7,300. And vice versa. A seller might say, look, Bitcoin's at 7,500 now, and yeah, maybe up on my money a little bit, but I'm not selling it until 7,700, right? There's people who have those different kind of risk-reward profiles, and they have their levels set. So those people don't really affect price too much. They're giving an opportunity for someone to match on the other side. What really dictates price is what the market buy or sell orders are dictating. Is there a lot of people who are market buying? So if a whale, and that's a very common term in this space, if a large investor is saying, I want to buy 5,000 Bitcoin and I want to buy it now, it's going to shoot up the price. It's going to make price go up dramatically. That is an inflow into the market. And on the opposite end, if a whale or some large investor in Bitcoin says, I really don't like where Bitcoin's going right now, I need to get out of my position and I want to get out now, and sells 5,000 Bitcoin, it's going to drag down price. And it doesn't matter in this case, if it's on OTC markets or if it's on spot markets. I'd say spot markets have more of an effect, but it will have a general effect here across the board because it is a clear, massive move on supply and demand in this case, okay? Again, it's going to be mainly on spot exchanges here, but I'd say it even has an effect here if it's dramatic enough and there's enough sellers, enough outflows or inflows that it's going to dictate price across any market, okay? So imperative thing to understand here, okay? So now that we understand this concept, right? What are the inflows and outflows of Bitcoin? Let's keep it really simple. What is serving as a positive for Bitcoin's price to put buy-side pressure into Bitcoin, increasing price? And what are things that provide sell-side pressure that decrease price? Well, there's a few things. In most markets, you would stop with the simple terms of buyers And you guys have to tolerate my my mouse drawing here. So buyers, looks like I almost like made like a W with like the Y tail here. So buyers, and on the outflow side we have sellers. All right, and that's where most markets generally stop. And you can get really creative with different types of buyers and sellers and stuff, you know. But long story short, that's what markets are going to depend on. Well, Bitcoin is a little bit different than, say, equity markets, or currency markets, I guess, might have something similar. But the major thing here is miners. Okay. Now, again, as we talked about earlier, when those miners are getting those block rewards, the thing that a lot of people don't understand is that they're not holding those Bitcoins usually. It's very rare. Maybe in the early days people did, but in the modern world, mining works very similar to commodity producers. All right, commodity producers, when they mine for gold or they mine for silver, they're looking not to hold on to gold and silver and see the price go up. They're hoping to mine at a specific cost and sell it at a specific price in order to make some kind of margin, some kind of profit. And that's the exact same thing with Bitcoin here. But in the case of Bitcoin, for miners in this case, right, they're providing, as they would in commodity markets for these miners and, gold and silver, they're providing sell side pressure. And they're doing it every single day because we know that every day there's about 1,800 Bitcoin that are being issued every single day, okay? So that's a lot of Bitcoin. It's a lot of Bitcoin. In fact, we can easily do some simple calculations here. At 1,800 Bitcoin per day, at a current market price of 7,500, we're a little bit off from that now, but just to keep it simple, 7,500. That's 13,500,000 worth of sell side pressure every single day. That's not even including this top part here of sellers. Maybe there's a lot of people who are fearful in the market. This alone, the miners are providing $13.5 million of sell side pressure. So in order to generally maintain a price of 7,500, just to keep things neutral, every day we have to have about $13.5 million worth of buyers. This means $1,800 Bitcoin being purchased every day at that given market price. Right? These are market orders, generally speaking. So that's just to keep things neutral. In order for people to hopefully see a price increase in Bitcoin, we'd probably need this number to be higher, maybe double or triple, to really start seeing some effects on price and showcase that we have a majority of inflows rather than outflows. And again, this is that principle at work here of the different aspects that are going to drag or increase Bitcoin's price, right? So now that we understand that, let's go ahead and talk about what the halving would mean for Bitcoin, right? We can do some simple calculations here. I'm going to go ahead and I'll bring over my calculator tool here so you guys can see it on the screen. All right. So we're going to go ahead here. All right. And we're going to go ahead and do some very minimal calculations. So I'm sorry, I'm trying to get the window shaped up here. There we go. All right. So let's take our 13.5 million, right? If the halving is cut in half, right? Well, we'll actually do the proper calculation. It'd be, let's say that by May of 2020, right? The price is the exact same, right? It could be double, it could be whatever, it doesn't matter. 7,500, just to keep it simple. And we're going to multiply that by 900, okay? Because that's half of what we would have originally, right? 1,800 to 900. Well, that's now only $6.75 million worth of sell side pressure. Still a good amount, but it's a lot less than previously was existent before the halving event. Now, what does that mean in order for Bitcoin's price? Well, what it means is that we only need 900 Bitcoin worth of buy side pressure at that price to maintain price. And in fact, let's say, for example, that during this time period, as Bitcoin tends to do, we have waves of new adoption. I was just meeting people this past week, small individual retail investors who are getting involved in crypto startups, or maybe just heard about Bitcoin and emerging markets. I just got back from my trip to Paraguay, so I heard about this. And I also know some institutional investors who have just recently gotten into Bitcoin. We now need half of the inflow of what we originally had. We don't need 13.5 million, we need 6.75 million, right? So this number has dropped dramatically. If we were already maintaining 13.5 million of buy side pressure to maintain price, then we now have double the inflows than we do outflows. This number has dropped down to 6.75, excuse me, I'll type it out, 6.75. So we can see here 6.75 million. And let's say again, if we maintained that buy side pressure, right, In this case, we have double the inflows as we do outflows. So you see my point here, guys? This is what I'm really trying to put forward. I'm sorry, I'm trying to do it here on an illustration here just to make it very understandable. But on a very basic level, this is what's going to dictate those price differences. And what happens is that you have one of these divergences where you have 2 or 3 times the inflows of outflows, where price really starts to reflect that change in supply and demand. And then you have the waves of people coming in. Those people we talked about earlier who have no idea about cryptocurrencies at the moment and have yet to discover how great Bitcoin and cryptocurrencies are, and they now find about it. This is why the supply and demand system of Bitcoin works so well and why the stock to flow model is so valuable. Sometimes those cycles can happen a little bit later. Sometimes they can happen a little prematurely, right? Again, the general principle is that whenever you get enough of that buy side pressure coming into outflow to outpace the outflows, right? The inflows outpacing, the inflows outpacing the outflows. I can't even keep up with myself, guys. But anyways, that's my general point here, is that when those inflows can outpace outflows, price goes up. And vice versa. When outflows are outpacing inflows, that's when price goes down. It's exactly what happened to Bitcoin back here, right? When Bitcoin was exuberantly overvalued in this case, there wasn't enough buyers to maintain it. And that's why price fell, right? We had a lot of volume coming in here. And then at 20K, where a lot of people started selling and miners were continuing to sell as well, the buy side pressure was not enough. You could see that price tried to come back up here. Some buyers came in. There wasn't enough buy side liquidity to keep prices up. And therefore, we entered into an 80% correction of Bitcoin's price. Well, now we have gone through that. And we are stepping up in the next 6 months into the halving of it. It's going to be a very exciting time, guys. I would say to be prepared for it, to not have all your eggs in one basket. Don't go all in on Bitcoin. That's a big misconception as well. And I'll use that as my closing point. You don't have to be all in on Bitcoin, and you don't have to have no exposure to Bitcoin, right? You're going to have to determine for yourself, guys, because I'm not your financial advisor, what you want to do. But the idea here is that you can have some sense of exposure to Bitcoin if you so choose to. Again, you have to determine what you want. If you think that Bitcoin has a chance here of going to 100K in the next 2 to 3 years, that's probably going to outperform just about any market, generally speaking. I don't know of any market right now, whether it be equities, gold, and silver. I don't know what it is. Nothing's going to perform at 10x like that over the next 2 years. I just don't see it. All right? Those are all very large-scaled markets. Bitcoin right now is a very small asset. It's a multi-billion-dollar asset. It's not a trillion-dollar market, right? And I think we can get to $1 trillion market valuation, if not a little bit higher with that $100,000 valuation. But that's it for the video today, guys. I'd like to know what y'all think about this. If you liked it, drop a like, drop a comment as well, whether you agree or disagree. Let me know if I'm missing something in this case. If you think you've got a point to factor in here, whether it be to the positive side for Bitcoin's price or one of the things that I'm missing where the halving might be a bust in this case. It might not really push price higher. But this is the most simple way to look at it, guys, without overtly analyzing the chart, without diving too crazy into these data science models for Bitcoin. This is why they work. They go off of historical trends and they take in the economic model of Bitcoin. All right. So anyways, that's going to be it for today's topic, guys. But I want to let you all know about one last thing. It's not a sponsor. It's actually a charity event that's going on right now by one of our good friends, Cynthia, who runs a really cool crypto startup called Altcoin Fantasy. Long story short, for those you may not know, Altcoin Fantasy is a trading crypto platform where basically you can test trade or paper trade cryptocurrencies and see how well you can do. And they're actually doing an annual charity event. It's the first one they're doing where we're going to be donating a lot of money, not only from some projects in the crypto space, but from individuals like yourself to a lot of great charities such as Trees for the Future, which is a charity that I've really liked, and a lot of other efforts in relation to healthcare and nature initiatives in this case. So if you guys want to support and join the contest, you can join for free. You don't have to donate anything, but I'd highly recommend, if you guys could do like $5 or $10 or something like that. There's a lot of awesome prizes in there as well to potentially win. So if you guys want to, check out the links down below in the description for more information on it. But it's holiday season. Thought about if you guys wanted to maybe, contribute in this case and give. I think it's that time of the year where it's time to think about that. But anyways, I hope you guys are doing well, and I want to apologize as well. I know I've been away for about a week. I was in Paraguay doing some recording for a project that I'm an advisor for, TreeCoin, and I got to learn so much being there. I had such a fantastic time. I can't wait to showcase to you guys my trip there. It'll come out in the future when I do a video on it, but stay tuned for that, guys. I'm very excited to share that with you all. Anyways, have a wonderful day wherever you are, and I'll see you all in the next one. Stay tuned.